Yes, see this. In the last class, we discussed about problem number 2. There we discussed about notes to profit and loss account and format of profit and loss account. But if you see the problem, they have asked you to prepare the final accounts in the statutory form. That means you are going to prepare all the accounts, that is profit and loss account, balance sheet, and notes to profit and loss account and notes to balance sheet. So once again we'll relook at this problem, that is just in brief. Once again we'll discuss about this problem. See this, cash at bank they have given. So whatever the information given is trail balance information. So cash at bank, it is cash and cash equivalent. There is one working note under asset side. There you are going to show this information. Then machinery is a fixed asset. Under fixed asset you are going to write this information. Cash at bank may be the working note number 19. Then working note number 19. And if you see machinery, that is fixed asset is working note number 11. 15% HDFC bonds. So it is one kind of investment, and there is no other information. We'll assume that it is a long-term investment. Working note 12, that is non-current investment. There you have to show this information. Then interest on investment, that is other income. Interest on investment, if you see, yes, see this, interest on investment, it is a other income. Other income, working note number 23, there you have to show. Debenture redemption fund, it is a fund category item. General reserve, you have to consider this one. Depreciation, within the trail balance, it is given machinery and building. So depreciation and amortization expenses, profit and loss, working note, that is working note number 29, you have to show. Building fixed asset, working note number 11. Then interest on debenture. Interest on debenture is a finance cost, so there you have to show interest on debenture. Then debtor and trade. Debtor, it is a trade receivable. Trade receivable, there is a separate working note number 18, that is under balance sheet. Then trade creditor is trade payable. Trade payable, working note number 8, there you have to show. Then purchases and sale. Purchases, that is the purchase of stock in trade, working note number 25. Then sales is revenue from operation, working note number 22. There you are going to show this information. Debenture redemption fund, again fund category item, that is working note number 2, that is reserves and surplus. There you have to show. Then share capital, working note number 1. Then interim dividend. Interim dividend, it is given in the trail balance and no other information. So it has to appear only once. So under reserves and surplus, you have to deduct interim dividend from profit and loss account. Under reserves and surplus, there are two categories. One is reserves and one more is profit and loss account. Under profit and loss account, we are going to deduct interim dividend. Why? Because interim dividend is paid out of the profit, or we'll assume that dividends are paid out of the profit. So that is why we are going to deduct interim dividend. Taxation provision, it is adjustment item that we have to see. In the last class we discussed about this adjustment. Then profit and loss account, working note number 2, that is general reserve and profit and surplus. Then director fee, other income. Director fee, this is given in the debit side. So other expenses, not other income, other expenses. Other expenses, working note number 30, P&L last working note. Carries on purchases, again it is other expenses. Wages, employee benefit expenses. So this is the employee benefit expenses. So working note number 27, P&L. Discount on debenture, it is working note number 21, other current asset. Other current asset, there you have to show discount on debenture. Again, if you have to see whether there is any adjustment is given. Then interest on debenture redemption fund investment, again fund category item, working note number 2. Wages outstanding. Wages outstanding, you can say it is other current liability. Other current liability, working note number 9. Then stock opening stock information, that is changes in inventory, working note number 26. Then goodwill. What about goodwill? Goodwill is fixed asset, that is intangible asset, and we are going to show it under fixed asset. That is why it is working note number 11. Then tax paid, there is an adjustment that we have to see. Then office expenses, other expenses, working note number 30. Then salary. What about salary? Salary is employee benefit expense, that is working note number 27. But there is an outstanding salary. Outstanding salary, other current liability, that is working note number 9. Then bad debt, other expense, working note number 30. But there are certain adjustment that you have to add new RPD and deduct old reserve for doubtful debt. Then 15% debenture. 15% debenture, long term borrowing, that is working note number 3. General reserve, working note number 2. Other expense, this one, transfer fees. Transfer fees is credit side information is given, so other income. Other income, working note number 23. Provision for bad debt, that is old RBD, working note number 30. Deduction. Unclaimed dividend. Unclaimed dividend is other current liability, that is working note number 9. So like this we have divided which item goes where, under which working note in the last class. Then after that we have seen certain adjustments. See this adjustment to the problem we have seen. Make the provision for doubtful debt at 5% on debtor is given. So whatever the adjustment item, it has to appear twice. So here first thing, that is other expenses, working note number 30. There you have to add this information to the bad debt. Bad debt, then you have to add new RBD. This is new RBD you have to add. Then one more thing comes under trade receivable, working note number 18. There you have to deduct new RBD from debtor. So two times adjustment comes. Again, stock at close is given. Closing stock information is given 25,000. Market price is 22,500. Whichever is low, we have to take. So again, two times it will come. One is in changes in inventory. Opening stock minus closing stock. Whatever the difference you are going to write. That is working note number 26. Then one more thing is inventory. Inventory in balance sheet, that is only closing stock you have to show. That is working note number 17. There you have to show this information. Transfer to debenture redemption fund. This is working note number 2. First you have to add to the general reserve. Any transfer you have to add to the general reserve. And again from working note number 2, that is a profit and loss account, you have to deduct this debenture redemption fund. Why? Because transfer is made using profit and loss balance. We'll assume that transfer is made using P&L balance. Then write off 50% on discount on debenture. So one, that is discount on debenture, it will come in other current asset, that is working note number 21. There it will come. Then one more thing is discount on debenture, wherever there is a written off. So this is a written off, they have said. Written off means depreciation and amortization expenses. Amortization expenses, working note number 29. There one more time it will come. Then provision for taxation, short-term provision. First P&L adjustment after profit prior to taxation expenses. There you have to deduct this provision for taxation. And under short-term provision, that is working note number 10. There you have to show this information. So two times. Tax liability, this is for adjustment purpose. So while we are doing the working note, we have seen that it comes twice. That is about this particular problem. So in the last class we discussed the notes to profit and loss account and format. Now let us see notes to balance sheet. Notes to balance sheet. So balance sheet, there are 21 working note. So now first working note we have to see, that is share capital. Only one information is given in this problem and directly they have mentioned share capital. If it is paid up capital, again you have to consider that information. Any type of capital you have to write, that is under share capital. So only one information, directly 1 lakh, note number 1 is over. Now very important note from the point of view of the problem, that is note number 2. Note number 2 is reserves and surplus. There you see all type of fund information, fund, all type of fund information you are going to write. First one, debenture redemption fund, where it is given. First we have to see the question. So let us see the question now. Debenture redemption fund, where it is mentioned, that we have to see. See this. Debenture redemption fund investment, that is 25,000. Whether we have taken the same information? Yes. So we have taken 25,000. Next, Interest on debenture redemption fund. Again, where this information is given. Interest on debenture redemption fund. See this. Interest on debenture redemption fund investment credit side balance 800. This also we have to take. So we have to add these two information. Then transfer to debenture redemption fund. Transfer to debenture redemption fund is given in the adjustment. Again, this also we have to consider. And last thing we have to see is general reserve. That is also we have to take. So we have to add all these four information. Once we add all these four information, we'll get the total, that is 60,100. 25,000 plus 800 plus 2,000 plus 32,300, 60,100 will get the total of reserve. But you know, working note number 2 has two category. I have already told. Now next thing, so you can write this amount in the outer column, and you can continue in the same working note, that is profit and loss account statement. So profit and loss account, we have to see the information here. So how to see the profit and loss account information? First, any profit brought forward, whether it is given in the question, that we have to see. So let us see the question. Their profit and loss account information we have to search. So here, profit and loss account, see this, 6,000. 6,000 debit side balance. 6,000 debit side balance means whether there is a profit or loss. Here in this question it is a loss, because debit side balance is given. If it is a credit side balance, you know it is a profit. So now loss information, see this, balance brought forward, loss information 6,000 directly from the trail balance we have taken, and it is a negative information, that is why it is written in the bracket, that is minus symbol is taken. Now add to this, you have to add profit for the year. Profit for the year, from where you will get, that is statement of profit and loss account. See this statement of profit and loss account, in the last class we have discussed, it's final total. Final total we have to see, where is that final total is given, profit for the period, last sentence, profit for the period 11,500. So this 11,500 you have to add to the balance brought forward. But in this question there is a negative balance. Negative balance is less, positive balance is more. So your answer will be positive. Then one more thing you have to add in this question is excess taxation provision. Why excess taxation provision we have to add, I will tell you. Because in the last class we discussed one working note regarding to the taxation provision. So let us see that working note. Where is that working note? See this one, taxation provision for the previous year. That means to meet the tax expenses, certain amount kept aside for the previous year, that is given in the trail balance, is 12,000. That is already mentioned in the trail balance. But actual tax liability, this is given in the adjustment for the year, that is 9,000. So you see now tax liability is 9,000 and your provision is 12,000. That means unused provision or excess provision, that is 3,000. Difference amount 12,000 minus 9,000, you will get 3,000. Such excess provision you have to add to the profit and loss account note number 2. That is why it is added here. See this, where we have added under P&L account excess taxation provision 3,000, 12,000 minus 9,000 we have added. Now we have to find one total. That total will be 8,500 minus 6,000 plus 11,500 plus 3,000. Total 8,500. Then from profit and loss account there are certain transfer is made. One is a transfer to a debenture redemption fund, that is given in the adjustment, that is made. And one more thing, interim dividend is also paid from the profit. Because it is not given, we'll assume that it is paid from the profit. Why? Because or else from where company is going to get the amount to pay the dividend to the shareholder. That is why here now two types of deduction we have to make from this balance. First one, let's transfer to minus transfer to debenture redemption fund, that is balance sheet in the tail balance adjustment item. So it has to appear twice. See this. Now transfer to debenture redemption fund, here we have added, where we have added above in the same working note under reserve we have added. Now from profit and loss account we have to deduct this information. Let's transfer to debenture redemption fund 2,000. Then interim dividend given in the trail balance you have to deduct 5,000. So now final total of profit and loss account, that is 8,500 minus 2,000 minus 5,000, that is 1,500. But we want reserves and surplus total. Reserves and surplus total means reserve final total, profit and loss final total. So reserve final total we got, that is 60,100. 60,100 plus P&L final total 1,500. So total reserves and surplus, note number 2 final balance, that is 61,600. So now note number 2 is over. Now next thing we have to see note number 3, that is long term borrowing. Long term borrowing, in the question they have given debentures. See this now, debenture, 15% debenture, class of debenture they have given, that is in the trail balance, within the trail balance, that is 30,000. But there are certain adjustment. For that now we have to see the question. See this, interest on debenture, if you see interest on debenture is paid only for the half of the year, that is from April to September. So remaining half of the year it is not paid, that is why there is outstanding interest. Outstanding interest information is there. So how to get outstanding interest information? 30,000 into 15% class of debenture and 6 month due, so 6 by 12. If you do, you will get the interest outstanding information, that is 2250. Then now we have to get the final total of note number 3, that is 30,000 plus 2250, final total, that is 32,250. Note number 3 is over. So like this we have to do for all the 21 working note. So now we finished with the third working note, and you see now fourth working note is about deferred tax liability. And deferred tax liability we have already discussed about accounting profit and tax profit. In this trail balance question they have not mentioned about both. That is why no deferred tax liability, nil. But even though nil information, you have to write the note number and just state that it has a nil balance. Then note number 5, other current, other long-term liability. Other long-term liability not specified in the question. If it is specified in the question, then only we can consider. But here it is not given. That is why it is nil. Long-term provision. Long-term provision, usually a provision made for more than 1 year. Again, it is not there, nil. Short-term borrowing. Short-term borrowing, again, loan taken by the company for usually less than 1 year, not there, nil. So these four working notes are nil, 4, 5, 6, 7. Now we have to see working note number 8. Working note number 8 is regarding trade payable. So trade payable, only one information, creditor. Creditor information is there and no other adjustment regarding the creditor. So directly this information from the trail balance you can write. So note number 8 is over, creditor. Note number 9, that is other current liability. Other current liability, if you see, there is wages outstanding, unclaimed dividend and salary outstanding. So now we have to see the question where unclaimed dividend is given. Unclaimed dividend is given in the trail balance and to that to credit side information. See this, credit side 250, dividend which is not claimed. So that is outstanding. So other current liability you have to show. Then one more thing is about wages, where wages information is given. Wages outstanding. See this. Wages outstanding 8,000. So this information also you have to consider other current liability. Next, salary outstanding we want. Salary outstanding. Salary for 11 month 9,900. 1 month salary is not given. Outstanding. How to calculate 1 month salary? 9,900 divided by 11. If you do, you will get 900. So 900 is that amount. A 1 month salary outstanding amount 900. So 900 you have to take as outstanding salary. See this. Only three information under other current liability. Total of note number 9, that is 9150. Then last working note of liability. Last working note of liability, that is note number 10, short term provision. Directly from the adjustment provision for taxation they have given. See this. Now we have to see the question, provision for taxation adjustment. See this. That is why it is short term provision Usually taxation provision means it is a short term provision, so we have to consider under note number 10. That is why we have taken note number 10 is over. Now liability side notes are over. Then now we have to see the notes of asset side, that is 11 to 21. So note number 11 now, note number 11 is regarding fixed asset. And in this question, if you see, a depreciation is given in the trail balance, already calculated. So no need of deducting the depreciation from fixed asset. If depreciation is given in the adjustment, then you have to deduct the depreciation from the fixed asset and then you have to show the amount. But here no need of doing that. Directly machinery from the trail balance 20,000, building 80,000, goodwill 30,000. How we got this information? See this now. Once again we have to see the question where machinery information is given, that we have to find out. See this machinery 20,000, that is given in the trail balance. So directly you can write building 80,000. So that also you can write. Then goodwill. One more thing is goodwill we have to find out. Goodwill, see this 30,000. 30,000 is goodwill, that also we have taken. So now fixed asset final total, all three information we have to add. 20,000 plus 80,000 plus 30,000, 1,40,000. Now note number 11 is over. I hope you are getting this. So anything you want to ask, you can ask me now. Yes, tell me. Yes, any doubt? You can tell me now. Akamsha, Amrita, Ashish, Kuchal, Nishant, Omkar, Shifali. Akamsha, Ashish is saying no. See, I have already told you that you have to see the format to remember which head and what is the working note number. Then only it will be relatively easy to solve this type of problem. So now working note number 11 we have discussed. Now working note number 12, that is the non-current investment. Non-current investment means that is investment usually for more than 1 year. So once again we'll see the question. If you see the question, there they have mentioned 15% HDFC bond. So investment made by the company, investment made by the Lanco Limited in private bonds. So that is 10,000. No information is given. That is why we'll consider that under non-current investment. And one more thing given in the trail balance is just investment. Information is given. Where that information is given, we have to find out now. Where that information mentioned investment. Can you tell me now where it is given? Debenture redemption fund investment. So that we have to search. Debenture redemption fund investment, where it is given. Yes, see this here. Debenture redemption fund investment 25,000. Again, this is investment made in debenture funds. So that also we have to take no information. Usually this type of investment for 5 years, 3 to 5 years. That is why we are going to consider this information. So only two investment 25,000 plus 10,000. So total 35,000 non-current investment. Note number 12. Note number 13. See, in the problem, almost 8 to 9 working note you will get as nil because no information will be given about those working note. So only you have to calculate is 20 to 21 working note and the format. That's it. So you see now, note number 13, that is deferred tax asset. Again, book profit, tax profit information not there, nil. Long term loan and advance. So this is a loan given by the company to the third party. That is also not given, nil. Other non-current asset, not specified, nil. Current investment. See, now we have taken non-current investment. So our current investment is nil. If we assume this 15% HDFC bond as a current investment, then you can write this information here under note number 16. But usually the practice is to assume this as non-current investment. That is why we have taken under note number 12. So non-current investment note number 16 is nil. So now note number 17 is about inventory. Inventory, that too only closing stock we have to write. So for this we have to see the question and adjustment. So if you see the question, stock information adjustment, stock at close 25,000, market price 22,500, whichever is a low. 25,000 or 22,500, whichever is low we have to take. Which is low? Your market price is low, so our closing stock value is 22,500. So that is why we have taken 22,500 under note number 17. Then note number 18 is about trade receivable. Trade receivable, two information we want, debtor and RBD. So once again we have to see the trail balance question. Debtor information we have to find out, where debtor information is given in the trail balance. See this, debtor and creditor information given together. Debtor information debit side they have given 25,000. Creditor information, that is credit side, they have given 28,000. We want debit side information 25,000. So our debtor balance we know now 25,000. Next thing we have to find out, that is make provision for doubtful debt 5% on debtor. That means on 25,000 you have to take 5%. So what is that amount? So let us see, let us calculate that amount now. 25,000 into 5%, that is 1,250. 1,250 is our new RBD. So this new RBD you have to deduct from debtor in order to get final debtor balance. See this, now 25,000 minus 1,250, final balance is 23,750. Trade receivable, note number 18. Now note number 19, cash and cash equivalent. In this question, cash in hand balance is not given. Cash in hand balance is not given, but cash at bank balance is mentioned. So directly from the trail balance, you can write this information. Cash at bank 28,000. Note number 19 is over. Now note number 20. Note number 20 is short term loans and advance. Short term loans and advance given by the company to the third party or outsider, that is usually less than 1 year, that is not mentioned in the question. That is why it is nil. Last working note of the problem, that means last working note of balance sheet. Before we have calculated working note for profit and loss account, 9 working note. 9 plus 21, total 30 working note. So now discount on debenture. So now other current asset, one information we have to write, discount on debenture. So discount on debenture, there are certain adjustment that we have to see. So let us see the question. Once again we have to see the question and their adjustment. See this, write off 50% on discount on debenture. That means now discount on debenture information we have to search in the trail balance where it is given. Discount on debenture, where it is mentioned, just you have to search this information here. See this, discount on debenture 1,500, it is given in the trail balance. So write off 50% means on this amount take 50%. 1,500 into 50%, that means 750. So 750 we have taken discount on debenture. Next, tax paid in advance. So one more information here comes is tax paid in advance. That is before doing the working note of profit and loss account. In the last class we have prepared additional two working note. One is for taxation provision and one more is for tax paid in advance. So that working note we have to see now. So we'll go back now. See this working note we have to search, that is additional working note. Yes, see, actual tax paid. So this one, this working note we have to see. Actual tax paid is 10,000. Tax liability for the previous year 9,000. Tax paid in advance is 1,000. So where this information is given in the question, that also we are going to see. Now tax paid, first thing in the trail balance you have to search tax paid information where it is given. Tax paid information we want, see this, tax paid 10,000 given debit side balance. So this tax paid during the financial year 2014-15. So now we know for 1 year this is a tax paid, but what is our actual tax liability for that year, that is given in the adjustment. So if you see the adjustment, tax liability last sentence, tax liability for the accounting year 31st 3 2014 is fixed at 9,000. So your liability is 9,000. You are paying the tax 10,000. That means you are paying the excess tax. You are paying the excess tax, and that excess tax is known as advance tax. Advance tax paid by the SSE or advance tax paid by the company for the next financial year in the present year. That is why that 1,000 we have to show under working note number 21. That is other current asset. So now you see other current asset note number 21, tax paid in advance 10,000 minus 9,000. Final answer that is 1,000. So see this now. Note number 21 we have to see. See this. Yes, tax paid in advance 1,000 we have taken, 10,000 minus 9,000. Discount on debenture we have already discussed. So final other current asset total we want. Final other current asset total is 750 plus 1,000. So 1,750. Now we discussed all the working notes, 1 to 30 working note we have discussed, and we have already discussed about the format of P&L, and we have got profit for the period. So now last thing we want to do is vertical form of balance sheet, under which first thing you have to write all liability working notes, then you have to get the liability total, then asset all working note and asset total you want to get. So now format of balance sheet in the books of Lanco Limited, balance sheet as on 31st March 2015. So now there are three columns, particular, note number and amount column. So under particular, under liability, there are four main categories. One is equity and liability. Under that shareholders fund is there, then share application funding money allotment, then non-current liability and current liability. There are four major categories given under liability. So as per the format we have to do now. First one, equities and liabilities main heading, under that shareholders fund subheading. So first one, share capital. Share capital we know that is working note number 1. So you can now see the working note calculation. Working note calculation in order to get the amount. See this, now we have to see working note number 1 where we have written the amount. See now, share capital we have written 1 lakh. So directly you can write the amount. By seeing the working note, you can write the amount in the format. So working note number 1, share capital 1 lakh. Now, second one is reserves and surplus, working note number 2. If you see the working note number 2, there we got final reserves and surplus total. See this, final reserves and surplus total 61,600. Like this you have to do for all the working note. 61,600 we have written. Then share application and pending money allotment, that is not given in the question. That means company has not received any money from the public, and the company is not due to make any allotment to the public. That is why here on dash. Anyways, working note number for share application and pending money allotment is not there. You have to write dash, and amount column no information. Nil you can take, or not applicable you can write. So this first head is over now. Shareholders fund is over now. And second head is also over. Nil information. Share application money pending allotment is over. Now third head under liability, non-current liability. Under non-current liability, there are four working notes. That is first one, long-term liability. Long-term liability, that is working note number 3, debenture information. Debenture, there is a debenture of 30,000 plus debenture which is not paid for 6 months, that we have calculated 2250. You can see the working note total, that is final total working note number 3. That information you are going to write here, that is 32,250. Deferred tax liability not there, nil. Other long term liability not there, nil. Long term provision working note number 6 not there, nil. Then now fourth head is current liability. Current liability, that is less than 1 year. Short term borrowing in this question not there, that is why nil. So these four nil, 4, 5, 6, 7 working note is nil, that you have to write as nil or not applicable. Then trade payable, working note number 8. Here trade payable means a creditor information. Creditor information we have written 28,000, so that you are going to write. Other current liability, that is working note number 9. What and all information in this question can you remember now? Other current liability, what and all we have taken, can you tell me? Yes, other current liability, three information is there. Other current liability, can you tell me now? Akamsha, Amrita, Ashish, Kushal, Nishant, Omkar, Shifali. Yes, tell me. Other current liability, three information. One is wages outstanding. One is wages outstanding. Second one is salary outstanding. Third one, can you tell me now? What is the third information? This third information given in the trail balance. Can you tell me? Regarding dividend. See this. Regarding dividend, what is our third information? Unclaimed dividend. Unclaimed dividend. So these three information total we have done, and that total amount is 9150. So once again we can see, we can cross check. See this, note number 9. Note number 9, final total we are going to write 9150. So we have written that in the format. Then short term provision, taxation provision, only one information, that is 10,000. Now 1 to 10 total we want. From note number 1 to note number 10 total. Add all this information, you will get the total as 2,41,000. This is our liability total, our liability side total. Now next asset information we have to enter in the format. So now asset information, you see there are mainly two categories. One is non-current asset, second one is current asset. So under non-current asset there are 5 working. So first one is fixed asset. Fixed asset in this question, machinery is there, building is there, goodwill is there. So total 1,30,000. Directly from the working note we can see and write the information. Non-current asset, there is debenture redemption fund investment is there, and 15 this one HDFC bond investment made by the company in HDFC bond. So you can combine that information, or else you can see the working note number 12 and there directly you can write the amount. Deferred tax asset not there, nil. Long term loan and advance working note number 14 not there, nil. Other current asset 15, nil. Now, second main head under asset, that is current asset. Under this, there are 6 working notes. Now, current investment. Current investment in this question not there, 16, nil. Inventory, we want closing stock. Only closing stock, that too, stock original value or market price, whichever is lower. So here, whichever is lower, 25 and 22,500, that is 22,500. We have taken. Trade receivable. Trade receivable, there is a debtor 25,000. From that, there is a new RBD that you have to deduct, or less reserve for bad debt or doubtful debt, that you have to deduct. You will get the answer. Or else you can see the working note number 28. See this. Working note number 28 we will see now. See this. The final total of note number 18. Sorry, not 28. Note number 18 total. 23,750. So same information here we have taken 23,750. Trade receivable. Now cash and cash equivalent 19 only. Cash at bank information 28,000. Short term loan and advance working note number 20, that is not there, nil. Other current asset 21,1750. What and all other current asset. Lastly we are going to see this. See this one. Discount on debenture is there. Tax paid in advance. Add both, final total we are going to write. Now we have to add the total, that is from 11 to 21 we have to make the total now. From 11 to 21 add all this information, you will get the total, that is 2,41,000. This 2,41,000 should be equal to this total liability total. Then this sum is over. I hope you understood.